Hello, my name is Michael Swanson. I run the website wallstreetwindow.com, and I run a private group for high net worth investors and traders called Power Investor. We've seen some wild weeks in the stock market up and down, and as we go into the month of March, it's time to plan ahead to make sure this becomes a profitable month for us. Now, in order to figure out what to do in the financial markets, you must align your decisions and your investments and trades with the dominant trend of the market. I do that by using stage analysis. The stock market moves in a cycle. You have a stage 1 basing phase, a stage 2 bull market, a stage 3 topping phase, and a stage 4 bear market. Now you can figure out what stage the market is in by how the market averages are positioned and acting in accordance with their 200-day moving average. In a bull market, that moving average floats up, trends up, and acts as support for the market averages. It becomes an incredible buy point. In a topping market, those moving averages flatten out. And in a bear market, they turn down and act as powerful resistance. Now, when you look at the S&P 500, it's clear that last year was a stage 3 top, and the beginning of this year launched the beginning of a brand new bear market. The market average, the S&P 500, the Dow, and the NASDAQ are all below the 200-day moving average. The 200-day moving average is floating down and is now acting as resistance. What we've seen, though, in the month of February is a bounce, a rally within a bear market. When you're in a bear market, you want to use bear market rallies and bounces to get out of positions that you no longer want to own, and if you want to make money in the next decline, you want to use the rally to bet against the stock market and to even bet against individual stocks that are junk, because the worst stocks in the market tend to drop the most during stock market declines. These are stocks that I call POS stocks because they're junk. I'm actually short a bunch of stocks like this, and I expect them to really drop within the next couple months, really beginning pretty soon. Take a look at this chart. This is the S&P 500, and take a look at the bounce. The daily stochastics are now above 80. They're a momentum indicator that tells us that the stock market is now overbought. Now, this indicator doesn't say it's going to collapse immediately in the next hour, but it does mean that whatever happens over the next couple days or even the next week, the bulk of the gains on the bounce that began in February have been made. The risks are now to the downside. And that means it's time to get out of positions that you no longer want to own, and it's time to also bet against junk stocks. This is the entry point. And in order to help you take advantage of this entry point, I have released a report today about 5 troubled stocks that I'm betting against right now that I think anyone can bet against and profit on the next market decline, which I think is going to begin at any moment now. So to get this report, simply go below this video and take action, and I will see you on the other side.